What if I told you a single stock just crossed $1 trillion in market cap, gained over 700% in a year, and is still being called undervalued by Wall Street? This is Micron Technology, and it's at the center of the biggest shift in tech since the AI boom started. Let's break down exactly why this stock has become the most important name in the memory chip industry right now. Let's start with the headline numbers, because they're pretty hard to believe. Micron just posted $41.5 billion in revenue. That's up 346% from a year ago. Gross margin hit 84.9%, an all-time company record. Adjusted earnings per share came in at $25.11, more than 12 times what it was a year ago. And management isn't slowing down. Their guidance for next quarter is $50 billion in revenue. Clearly, it's not a one-quarter fluke. So why is this happening? Simple. Micron's CEO straight up said the company can only fulfill 50 to 65% of customer demand. That means more than a third of orders are going unfilled, and that gives Micron serious pricing power. On top of that, they've now locked in 16 strategic customer agreements worth roughly $100 billion in future revenue. And here's the twist. These new contracts have price floors that guarantee margins even above today's record highs. Naturally, Micron is pouring money back in. $27 billion in capital spending this year alone, raised 3 times. They're betting big on these orders. Let's make this real. Who is actually buying all this memory? In June, Micron announced a strategic multi-year partnership with Anthropic, naming Micron a primary supplier of memory and storage for next-generation AI infrastructure. And Anthropic is just one name on a much bigger list. The 4 biggest hyperscalers, Amazon, Microsoft, Alphabet, and Meta, are projected to spend $650 billion on CapEx in 2026 alone, and that number could blow past $1.1 trillion in 2027. Now let's talk price action. Micron is up roughly 790% over the past year. It crossed an all-time high near $12.55 just this week, and it's now sitting above both its 50 and 200-day moving averages. That's a textbook strong uptrend. But the stock has a beta of 2.17. That means it moves more than twice as much as the broader market. We saw single-day swings of 15, even 17% around the last earnings report. Bottom line, the trend is your friend here, but buckle up, because the ride is not smooth. But here's something a lot of headlines skip. Micron is not the market leader in the hottest segment of memory, which is high bandwidth memory, or HBM, the chips that go directly onto AI accelerators. SK Hynix dominates with about 62% share. Samsung sits around 21%, Micron trails in third at roughly 17%. But Micron actually holds more patents than SK Hynix, 621 of them, nearly double. They're betting on next-generation chip architecture to leapfrog the competition in the years ahead. This is the one thing to watch. Can Micron turn patent leadership into market share leadership? Quick gut check. After a 790% run, is Micron actually that expensive? On a trailing basis, the PE is around 25, totally ordinary for a tech stock. But look at the forward PE, down around 8 to 12 times. And the PEG ratio, which weighs price against growth, sits at just 0.05. By that measure, this stock is statistically cheap, assuming forward estimates hold. But here's the catch. Look at the spread in analyst price targets. The low is $385. The high is $2,200. Wall Street is really split on what this company's worth. So let's lay both arguments out side by side. The bull case, Micron can only fill 50 to 65% of demand. They've locked in about $100 billion in contracted revenue, new deals have price floors above the current record highs, and hyperscaler spending is still accelerating into next year. Now the bear case, memory has crashed after literally every boom in its history. $27 billion in new CapEx this year is the kind of spending that seeds next cycle's oversupply. 2027 profit forecasts only work if AI spending never slows down, ever. And with a beta of 2.17, this stock can fall just as violently as it climbed. Both sides have real evidence behind them. Which one do you believe? Drop it in the comments. Every memory cycle has a clock, and here's where we are on it. Right now, in 2026, Micron's capacity is completely sold out. Locked in, contracted, no question. But 2027 is when the story gets interesting. That's when the $27 billion plus in new capacity that Micron, SK Hynix, and Samsung are all building right now actually starts coming online. And that sets up the real question for 2028. Does AI demand keep climbing fast enough to absorb all that new supply? Or does the industry do what it's always done and flood itself with too much memory at once? Nobody can answer that yet. But if you want to know where this stock is headed long term, this is the timeline to watch.
So here's the real question you need to answer for yourself. Is this a permanent structural shift where memory becomes essential AI infrastructure forever? Or is it the same boom-bust cycle memory has always had, just bigger this time? Nobody knows for sure. Not the analysts, not me, and frankly, not even Micron's own management. What we do know is the fundamentals right now are some of the best in semiconductor history. Record margins, sold-out supply, a $1 trillion valuation. But respect the volatility and respect the history of this industry. This is not financial advice. Always do your own research before investing. If this breakdown helped you understand Micron better, smash that like button, subscribe for more deep dives like this, and I'll see you in the next one. Thanks for watching.